Hello, everyone. Welcome to Switch Markets Live. I'm Shane Vernier, and this is the Piranha Strategy. Today, we're going to go over Mario Singh's famous strategy, the Piranha. I'm going to show you exactly how to trade it. I'm going to show you how to get set up on your charts with the proper constraints of the indicators. And then we're going to talk a little bit about what the strategy is, what it's designed to do, and how you can actually put it to work for you, not just on maybe one asset that it's recommended for, but maybe on several assets. So it's good to see everybody back. Ahmad, good to see you. We had a great session yesterday with that FOMC minutes. I really enjoyed that. We had a lot of folks, a lot of engagement. So if you have any questions at all as I'm moving along, be sure to ask me, and I will answer those in short order. As far as what the plan is for today, it's relatively straightforward. We're going to talk Piranha. We're going to start off with a trade update. We're going to get you up and rolling and really ready to go with this strategy, which is one of our most popular strategies we've actually released inside the How to Trade trading room, which is in our trading academy. So you just go ahead. I'm going to show you exactly where to find it, show you exactly where the video is, all the resources, everything you need to be a full-service Piranha trader. You can certainly get in there and do it. So good to see everybody back. Tina, good to see you. Tina, welcome. Been an interesting session thus far. We're going to be all over this Piranha strategy. Get everybody locked and loaded, ready to go. Dragon 131, good to see you. Dave's Apple, Bobby Bob. All right, guys, let's go ahead and get it going here. This is the Piranha live trading webinar. This is a pretty good strategy. It's for flat markets. I'm going to tell you exactly how to spot a market to apply it to in just a second. And remember, if you want to trade the Piranha or really any other strategy, go ahead and head on over to Switch Markets. Bring your ambition into focus. Thousands of markets, thousands of them. Tight spreads, zero commission accounts, and you guys will be ready to rock and roll with really any strategy you want, relatively short order. They've got a reverse KYC program going right now, which means you don't have to go through the traditional process, KYC, to get lined up and ready to trade. A lot of times that can take an extensive amount of time, up to $2,500. You can go ahead and get trading right away while your KYC is pending. It's called reverse KYC. You can hear a lot more about that in the coming sessions. And then also Algo Builder. Remember, if you fund with $50 or more, you're going to get Algo Builder absolutely free. We're making a webinar on Algo Builder right now. That's going to be dropping probably in the next week or so. It's going to give you a great tutorial on how to build a strategy with Algo, how to use AI to take your trading to the next level. So we're really excited about these features and passing along value to the Switch Markets clientele. All right, guys, before we get started, a quick trading idea review. I think that what we've got here is sort of an interesting type of a situation. This is our 920 EMA, our 4-hour 920 trade that we had earlier this week on the U.S. dollar Japanese yen, and it's back from the dead. I mean, it did not look good, guys. Right here was our entry. This was back on the 18th of August. Our entry was, pretty dismal. It didn't look as good as it needed to look for me. I said, boy, I don't know. I think that we could be in big trouble here. But what happened? We retraced, we came back, and I talked a lot about this crossover developing as it did yesterday. And I said, listen, you probably don't want to be looking at that trade. And the reason why is when the market gets choppy, you're essentially waiting for a break. And I always like to dance with the one that brought me, and that first signal is the one that brought us to the party, and that was going to be your buy. So that was your buy right there, right around 147.73. Interesting type of interesting play, especially ahead of the FOMC minutes. But you can see our swing low was exactly where we put our stop loss. Previous swing low, this is why I line my stop losses and I leave them. I put them down and I leave them. And the reason why is because you could have easily, if you moved your stop loss up to say right here or maybe right here, you got stopped out before we got the big move. So this one's back from the dead. We're looking at about a 148.70, somewhere right in there was the profit target, looking for about 100 pips. Right now, sort of looking pretty good. Back above 148, feel pretty good about price action. Do we actually get up here and get a look at our profit target? Well, we're going to have to wait and see exactly what happens. But right now, that 920 on the 4-hour, absolutely love it for Forex pairs. That's a pretty good trade. You don't need confirmation for the 4-hour chart. You don't need confirmation for the 4-hour, the daily. The RSI didn't play a factor. We issued this as a trade idea let's see, it was on the 18th. So that was about 3 days ago. Trade's in pretty good shape. Got the nice big roll. Why did we get it? FOMC minutes came in hawkish. I'm going to recap that for you tomorrow. We talked a lot about it yesterday, but boy, there has been a lot of hubbub, shifting interest rate expectations. I put those out in a trade idea earlier today. All right, guys, let's go ahead and get on with the program here. We're going to go ahead and look at the Piranha. I'm going to tell you exactly how to line this thing up, where to find it, and what exactly you need to do to trade it successfully. Remember, all strategies have risk. That's the nature of trading. When we trade, what do? We give away something today to get maybe something back tomorrow. We give away something this second to get something back maybe in 2 seconds. That's the idea. So there's weak spots in every one of these strategies. For the 920 strategy that I just showed you, the weak spot is when you're in a flat market. This one right here, this is the weakest part of the 920 crossovers when the market flattens out. It moves from left to right without moving directionally. That's really difficult to trade, especially with a crossover. Now, with the Piranha, what are we looking to do? We're looking for flat markets. Remember, markets only trend about 30% of the time. They break out probably even less than that. Timing a breakout is problematic at best. That's why we give all these different strategies on how to really position yourself ahead of the breakout, because you don't know when a breakout's coming. You almost have to be in the market as it breaks to give yourself a chance to really make some money on a sudden directional move. Now, the beauty of the Piranha is this thing's designed for flat markets. It's absolutely designed for flat markets. So the other 70% of the time when the market's going flat, you're going to have a chance to trade. And I like this strategy. I think that it's a pretty good one. Is it the best strategy? We're going to talk about the risk versus reward involved in trading this and how I don't really believe that it's necessarily as good as it can be given our rules. But we're going to go ahead and do our best to square it up and show you exactly how to trade it. So good to see you. Let me see. Let's see. Tina Jing, I got stopped out of a gold short trade. Yeah, gold sort of reversed a little bit today. We actually had that 4-hour gold buy, I think, set up on the 4-hour chart. I believe it's set up, and you're starting to see a little bit of rotation. Gold is hard right now. Gold is hard right now. It is a flat market. It's very difficult. Let me see. Yes, sir. Can you take a look at the USD JPN end of the stream? Looks like there may be a 920 crossover on the weekly chart. May even come into play on the daily chart soon. Looking for your thoughts on this. Yeah, yes, sir. I'll go ahead and circle back around. If I forget, be sure to tell me. And then, yes, sir. I was in on that USD JP run. Finally, some movement. Yeah, it was great. It was absolutely fantastic movement. So I'm glad you guys are getting a little bit. Ralph H., good to see you, Ralph. Okay, guys. First things first. This strategy right here is going to be a price action. It's not really a price action strategy. It's an indicator-based strategy, but if you can read price action, you can trade it very, very well and effectively. Now, where you find this, you're going to go ahead and go into your How to Trade trading room. Go ahead and click on that educational tab, and what you're going to do is go right down through your trading academy, and you're going to click on the Piranha. That's the video we're going to do. The presenter was Nick Quinn. He was a trading coach and mentor here for several years. I worked with him for 2 years. Fantastic trader, knows his business, knows it well, and really gives you a great presentation there that really helps to nail down the Piranha, what it is, and how to trade it. So you're going to go ahead and give that a click. And when you do give that a click, what's more than likely going to come up? This screen right here, especially if you're not ready to watch that just yet, and you're going to go ahead and get this and say, hey, skipping ahead will mean you miss out on learning. What you need to do is just continue, move me to a new path is what you're going to click, and that's going to get you right into your strategy video. Pretty simple, guys. Pretty simple. One last thing before we move on from where to find it. You'll notice that there's a lot here. You know, we've got the pendulum, the trend rider, the Japanese noodle, the W, Bach the talk, and then other courses. We have just a tremendous amount of content here inside the trading room. And then down here, underneath other courses, if you're interested in Fibonacci's, you go right there to this icon, 4 modules, 5 hours, 28 minutes, 30 years of experience trading in the markets. It doesn't have a thumbnail or a title, but that one right there is where you'll find my work on the Fibonacci counterpunch. So right there, so you're going to go ahead and click, move me to a new path, and then you're ready to rock and roll. So once you click on the video, what's going to happen is you're going to go ahead and pop up in this framework, in this screen, and then you're going to get started. Now, what you need to do here is, once you get past the get started, you need to really focus on these tabs underneath the video. Very, very important that you don't miss out on those. And you'll see that there's 3 of them under these videos. The description, Meet Your Coaches, and the Learning Resources. The Learning Resources tab is the big one. Click on Learning Resources, and you've got all these downloadable PDFs that are going to get you up and running with everything you need to know on the Piranha. And that's absolutely key. That's absolutely key. I think that the PDFs can get you started in a sort of a read. Of course, it's a read-only format, but they really do supplement the video. They're easy to read. In these strategies, we try to keep them as simple as possible. Some of them are a bit more involved. The Bollinger W is a bit more involved. The Japanese noodle and with Nick's strategy, that's a little bit more involved. This one's pretty simple. It's indicator-based, but it's pretty simple. Let's see. Tina Xing, I learn the modules every day. That's fantastic to hear, Tina. Thank you. We sure appreciate everybody watching those. We built them over a course of several years. There's many coaches in there that sort of work with you and try to get across some of the educational content that we need to get across. This is a strategy, so let's go ahead and get with it, guys. You waited long enough. Okay, so once you go to Learning Resources, download the PDFs, and right here, this is the Piranha Strategy, how to trade. Good look at the PDF. All right, the trading guide and strategy rules. To get set up with this, you're going to have to add an indicator, and what we're going to use is we're going to Bollinger Band. So we are going to start out with the Great Britain Pound USD. That's the currency pair we're going to focus on in the beginning, and I'm going to show you how to apply this to other markets as well. We're going to go ahead and select a candlestick charts. That's fine. You can use OHLC bars, though. You don't need to use candlesticks, but we're going to use the 5-minute chart. So if you're an intraday scalper and you want to scalp and you want to be a Piranha trader on the 5 minutes, 5-minute chart. So we're going to Great Britain Pound, candlestick chart, 5-minute pair, 5-minute bars, and then we're going to add the Bollinger Band indicator to the chart. Now I'm going to show you how to do that on TradingView and MT5. You're going to see that we're going to set the Bollinger Band length to 12 periods and 2 standard deviations. Now the reason why we're going to use 12 periods and 2 standard devs is we want something that's fast. If we're on a 5-minute chart, we're going to go back 12 price bars, and we want something that's very, very fast. Now, for reference, my own personal Bollinger Band settings, I use 1.9 and 24. We'll talk about that probably on a different video. But 12, 2. 12-2. I'm going to show you how to do that in just a second. You're going to predetermine your trading session window when you will trade the Piranha, making sure you avoid times when news events could affect the market. You're going to set the position size of 3% of your account. That's fine. We can handle that just easy enough. Now, the timing of this strategy, very, very important. Timing is everything in trading. I'm going to tell you exactly probably when you should be thinking about a strategy like this and when you shouldn't be. When the market's moving, the Piranha's a bad idea. But when the market's flat, a good 70% of the time, then you got a great chance to win. Okay, let's go ahead and get you set up first, and then we'll get on sort of with making some live trades. Now, you've got right here Great Britain Pound USD. Here's our 5-minute chart. Let's go ahead and start with TradingView here. Just to do this, you go right up to indicators, click on indicators, and go to Bollinger Bands. Give Bollies a click. You're going to add your Bollinger Bands, and we're going to go right over here to settings. I want to go ahead and click this and sort of show you what settings we need. Now, the inputs. You can see these are sort of my settings that I've got in my default settings for Bollinger Bands. I use different settings. Don't worry about it. For this strategy, we're going to go right there to 12. There's our 12. Basis is EMA. We're going to use a simple moving average for this one. Source, high, low, open, close. We're going to go on the close. That's the conventional way. Standard deviation, 2. That's it. Periodicity of 12. Basis MA type, we're going to go with a simple moving average. All right, you can go with whatever kind you like here. Mario Singh doesn't really define what you need to do with the moving average type. We're going to go with SMA. We're going to keep this as simple as possible. Simple moving average, simple as possible. Simple moving average close, standard dev is 2, and then I'm going to go ahead and leave these white. So what we have here is we've got our Bollinger Bands added, and you can see we're sort of creeping alongside that top Bollinger Band right now. A couple of things. I've used a black background, so I've got my Bollinger Bands in white so we can see them, and then also you've got sort of your red, and in the red, that's your midpoint. That's your Bollinger midpoint. We'll talk a little bit about that in a minute, but for this strategy, you really don't need to worry about the midpoint. Okay, let's go ahead and add it on MT5 now over on our Switch Markets Live. Where is my Great Britain Pound USD? Here's what we were looking for. Go ahead and drag and drop and take it right down to a 5-minute chart. Okay, now is it harder to do on MT5? No, it's not. Go right up to insert indicators, and then you're going to go right here, to trend. Now you're going to go to oscillators, volumes, trends right here, and you want Bollinger Bands. Bollinger Bands can be used as a trending indicator for us. For our purposes, we're going to use it to really figure out when there isn't a trend. And I'm going to tell you 2 ways you can do that here in just a minute. 12 periods, 2 standard deviations, apply to the close. Okay, let's go ahead and I guess we'll just leave it sea green, and we'll go ahead and put that down. So right there's your set of Bollinger Bands. That's how you add it on MT5 and TradingView. For the sake of argument of placing trades, I'm going to go ahead and use TradingView for right now, but realistically, it's not overly difficult just to use this to trade on MT5. It's actually a pretty good platform. The more I learn about MT5, it's starting to grow on me with the trade management, the drag and drop stuff. I like that. I can just navigate TradingView a little bit faster, so we're going to use that one. But if you have any questions on MT5, just go ahead and reach out, and I'll be sure to get back to you. So we're set up now. We're ready to rock and roll. We're ready to trade. Now, once we get our bollies on our chart and all our settings are great, we're dialed in. Now we need to know the rules to play the game. Now, these rules are per Mario Singh. I didn't write these rules. These are from his book. I believe it was 24 basic strategies, price action strategies, something like that. What these do is these govern the entry and the exit, and they govern not necessarily the timing, but they tell you when you can take a trade and when you can't take a trade. All right, so here we go. The first thing we're going to do is we're going to set the stop loss levels at 10 pips and the take profit level at 5 pips. Now, I know what you're thinking right away. We're going to risk twice as much as we're going to make, and the answer is yes, you are. Now, I don't particularly agree with that, but that's how we're going to line it up per the strategy. Now, the idea here is we're going to try to isolate flat markets, and in doing so, our goal is to win a lot of trades. If you're not winning 70, 75% of these trades, then you probably aren't making much money. Remember, you're risking 10, you're winning 5, you got to win 2 to make up for 1 loss. That means over the long haul, we need a lot of trades and we need to be successful. And the keys to success are figuring out when to apply this strategy. We've got some pointers for you there as well. Enter the short when the market touches the upper Bollinger Band, piece of cake. Enter the long when the market touches the lower Bollinger Band, piece of cake. We're selling from the upper, we're buying from the lower. Only trade one position at a time, okay? If a trade is profitable, wait for the next touch of the Bollinger Band on either side of the market. That's it. If a trade gets stopped out for a loss, you must wait for an opposite side setup. Okay, so if we sell and we get stopped out, we have to wait for a buy. We'll talk about that in a minute as well. So there you go. For example, if a trader buys the lower Bollinger Band and the market keeps falling, we got to wait for a sell. Relatively straightforward there, guys. Let's go ahead and see if we can get some real-world action going. Now, there's a lot of things going on right here in this Great Britain Pound USD. A lot of things. Number one, we're not moving much. So let's just say, for instance, that we wanted to trade a 5-minute chart, Great Britain Pound USD. We're looking for flat markets. But there has to be enough action in the market for us to have a chance to win hit our profit target. There has to be enough elasticity in the market to give us a chance to be successful. So if we were going to look through and say we wanted to start right here during the London U.S. overlap. So we're going right here. That would probably be your first trade of the day, 7:35 a.m. my time, 9:35 a.m. Eastern. You're going to have to translate that into your own time zone. That would have been your sell. You would have made money right there. Then what would have happened? That would have been your buy. Okay? You'd have made money right there. What could have happened again? You could have had a buy, probably would have lost right there. Then you would have had to wait for a sell, and then you don't have another trade. That probably would have been your sell right there. So we don't have the luxury of trading what happened when we show up to the market earlier in the day. So what we have to do is we have to say, okay, when do I want to trade this strategy? Great Britain Pound USD. I'm looking for flat markets. Well, if you're looking for action and enough volatility to get in and out of these trades within a reasonable amount of time, you're probably going to be looking at the London U.S. overlap. That's going to give you more trading options. However, we aren't looking to trade when this market's trending. So anything that's going to shake up the market, and this is really a good point, you need to write this down. If you're going to trade the Piranha, anything that's going to make the market move or trend, you don't need to be in there trading this. This thing is designed to play it from Bollinger Band to Bollinger Band to Bollinger Band in a flat fashion. We are looking for flat rotational markets. I say the word rotation a lot. Sideways trading markets. Markets that are moving from left to right. We don't want markets that are moving up and down. We do not want that. We want to just play a nice, quiet, rotationary strategy, and we want to get in and get our money when the getting's good. We cannot be doing this stuff after a CPI release, after an NFP release, maybe even after that U.S. Open. You might want to wait a little while to let things die down a bit. Any sort of UK CPI, EU CPI, things like that, central banking engagements, Fed announcements, BOE announcements, ECB announcements, all of it. You need to be very careful when you trade this. You want to trade it when there's no economic news events that are going to impact your trade, and you also don't want to trade it when the market's trending. So there's an easy way to tell when the market's trending, especially using Bollinger Bands. You'll see when the slope of the Bollinger Bands sort of comes into play when it's very, very steep, all right? That's probably an indication that, do I really want to go against this trend? Probably not. And then there's another thing that you can also look at. You've got really the width between the Bollinger Bands, between the lower and the upper. Now, when those widen out, that means that there's an incredible amount of volatility there. That's probably going to work against you, as in you might get stopped out before the market rotates back up to your target. So you got to be careful in those types of conditions. I would be looking at a trade like this to be brilliant. And, of course, it's easy for me to say in hindsight because, oh, yeah, Shane, you know it won. But really, take a look at what you have here. The market really, the slope on this is certainly flattened down a little bit. It's there, but it's flat, starts flattening out. You notice the Bollinger Bands start to condense a little bit. That's pretty good too. Now, there has to be enough distance between the Bollinger Bands to make it worth our time. In this case, there's about 24 pips between them. That's not bad. That's plenty of room. So if the Bollinger Bands are just 1 or 2 pips between them, you probably don't want to trade that using the Piranha. So for right this minute, how would we be looking to dial up a trade? 5-minute trade. All right, let's go ahead and line one up. Okay, we're going to go ahead. We're on a sell. Let's just say we started our trading day right now. You're going to have to try to sell right when we go to the upper Bollinger Band. So what we've got here is we've got a sell. I'm going to go ahead and dial that in right up there. And what we want is we want to enter our take profit and our stop loss. So our take profit, the price right there is going to be 10 pips. And our stop loss is going to be 10 pips. And the profit target is going to be 5 pips. Simple as that. Limit order. These are always going to be limit orders. Why are they going to be limit orders? Because they're going to be on the opposite side of price. So they're going to be above on a buy, they're going to be above on a sell and below on a buy. I always get those backwards when I try to say them. Limit order, sell, above price, limit order, buy, below price. They have to be limit orders because if you go at a market order, it's going to fill you immediately at the market. You don't want to do that. You want to be waiting. So right here, let's go ahead and set up our trade. And you can see right here. So here's basically our trade. We're risking $100 to win $50. Our sell limit is going to be right on this upper Bollinger Band. Now, there is a bit of guesswork here because the Bollinger Band's always moving. It's only a 12-period SMA. That means the Bollinger's going to move a lot. So you got to do your best just to sort of manage these things and keep your risk versus reward dialed in the way that it should be. Now, I understand completely. There's a lot of you out there that are saying, Shane, you're risking twice what you're going to make. And I know that. It's Mario Singh's risking it. I'm not necessarily risking it. So this is his strategy. For me, though, it can be very successful. In my opinion, if we were to get this trade right now, we're looking to sell 134.26s. We're printing 134.22s. If we rally up there and really get elected, I think we've got a pretty good chance to win just because the market isn't really doing much. That's going to give us an opportunity to grab that rotation right back down to our profit target, which is right there at 134.22, pretty much where price is now. So that's essentially how you would set that trade up. Not very difficult. So the fun part of the Piranha is using our creativity and understanding that, okay, if it's only going to be for the Great Britain pound and I'm risking 3% of my account balance on each trade, I mean, that's not going to, I mean, even on a 5-minute chart, how many trades would we have had today? Maybe 5 or 6. So to be profitable on a given day, let's say you're getting 5 or 6 trades a day, something like that, you're going to have to win 4 of them. 4 is 20, and then you're going to have 2. Let's say you had 2 losses, which would be 10. So that's just a break-even day, 4 out of 6. So you need to win 5 out of 6. That makes it really difficult to be successful. So I've done a little of my own homework here and sort of adapted the Piranha to the futures markets, but you got to watch CFDs. CFDs, the spreads are pretty large, so you're probably not going to be able to do this on a CFD, but there's no reason you couldn't do it on, say, the Euro USD. Absolutely no reason at all. Let's go ahead and duplicate our tab and go ahead and pull this up for the Euro USD as well, if it does pull up. Okay, here we go. All right, so what we want is we're just trying to find trades at this juncture. 5-minute chart, we've got our Bollinger Bands, really the same type of a situation. We'd be looking to sell, probably got into a sell, maybe somewhere right in here. Hard to say. Depends on when we started our trading day. And that's another thing that you have to be cognizant of. When you start your trading day is everything. Now, it could be any time. It could be the London Open. It could be the New York Open. It could be the Tokyo Open. You could wait until maybe late in the day in the United States when price action really slows down. You could wait until the pre-London Open just because that's convenient for you. Remember, the only thing that you really have to watch, and you don't need to be trading this, is when the market is really crazy and it's trending or there's a key economic data set out. You've got to be very, very careful with the economic events because those could knock you out quick. They bring a lot of volatility to the market. So your trading day is completely up to you. For the sake of what we're doing right here, trying to give you some live examples, we're going to go ahead and start our trading day, right now, as far as I'm concerned. So right here, Euro USD, we don't have anything. Let's go ahead and take a look. It may be let's check the spreads on some of these. We got a rotational day right now setting up in like the US 500. What's our spread? Okay, it's a very tight spread. What could we be looking to do right here? Let's say our trading day started right now. What could I do? I could buy the market. All right? I could buy the market. We've hit our lower Bollinger Band. I could just go ahead and I could put our buy down, my take profit right there, stop loss. Those are way too big. But we're going to go ahead and go take profits 5 ticks, stop loss is 10 ticks. Okay, so if I wanted to buy right now, according to this thing, we could do it. Now, is it a great trade? Not really. See, you can't really do it on CFDs because they're just too tight as far as pips go or ticks go. Let's go ahead and take a futures contract. This is something that I've done in the past, and it's actually been pretty good. So right here, you'd be in a situation where if we started right this minute, don't worry about these bars. These are subsequent bars. We don't know really what happens. So I'm going to go buy, limit. I'm going to go 1 unit, take profit, stop loss. And this is how the trade would essentially end up. 5 units there, 10 units there on a stop loss. Let's go ahead and buy it. Okay, so what do we have here? We've got 5 ticks. Okay, we're sort of entered. Let's say right here. We should be entered down here, but that's okay. We're just trying to do a live example for you. We're looking to get a little bit of a rebound. Now, remember, our trading day, I just started it right now. So what do we have happening here? We have a market that's moving against us. It looks like we're going to get stopped out, but there's our profit target and there's our stop loss. So this is high-impact scalping. I mean, this if you do this on 5 or 6 markets, this is scalping in a nutshell. It's fast. It's furious. Right now, the market's starting to move against us here in the E-mini. We're still in the trade. I mean, we're not dead yet. We should be long for probably right down here, something like this. But that's okay. We want to get up and rolling with this strategy. This is what a live trade would look like. It's 5 pips up. That's your profit target. And it's 10 pips down. Now, futures are great because you can do this in futures. You don't have to worry about those CFD spreads. We just tried on the US 500. You don't have to worry about that. You don't really have any spread at all. All you're doing is paying a commission to get in and out of the market. So if you're in the United States and you want to be a futures trader, you can go ahead and talk to me. I can give you a few ideas on places that to start. Full disclosure, I trade futures. But this trade right here, and these are demo dollars, guys. Don't get carried away with the actual dollar amounts. I want everybody to see the mechanics of this trade. I want you to see exactly how these things unfold because until you get in the saddle and you place a trade, you don't really know what it's like. And right here, it looks like we're going to trade up and potentially get our profit target. We should have probably already got it, but that's okay. We'll see if we spin higher, and if we don't, that's cool. But this gives you a good idea of what it's like. I mean, come on, get up, fill us up. Here we go. We're right there. We're right at entry. That lower Bollinger Band is acting as downside support. Okay, gapped up, got us paid. That's a good look at how you could use this maybe on the E-mini S&P 500. One of the ones that I really like, especially this time of day. Let's go ahead and go to WTI crude oil. Now you can see this is no longer the front month. It looks like we've rolled over to OC. So let's go ahead and go here. Let's go OC. Okay. Now, to execute a trade doing this is pretty good stuff right here. What are we going to be looking to do? We're going to be looking to sell the upper Bollinger Band, buy the lower Bollinger Band. So if I want to sell up here, I've got sort of an area, 63.54. So let's go ahead and put an order down. I want to sell it. I want to sell limit. 63 what? Let's go ahead and we can do this visually. 63.54, take profit, stop loss. I want to take profit of 5 ticks and a stop loss of 10 ticks. Now, is that wise? Very difficult. Difficult to make money doing that. You have to win a lot of trades. So right here, we're printing 63.47. You go over here to our trading depth of market, and you can see right here, you've got your trade lined up. 63.54 will be your sell. You're looking to get rotation back down to 63.49, and then you're stopping yourself out at 63.64. Now, what I'm driving at and why I'm looking at all these different markets is because if you're going to make it with something like a Piranha Strategy, which this was a popular strategy for us in the room. We've had a lot of traders that did pretty well with it. Just it's when the market starts trending, it really turns into trouble. Let's say you have to win, 2 out of 3 to make any money. You're going to need a lot of trades. And is it feasible to make a living trading the Piranha on just one pair? And the answer is no. In my view, you could trade the Piranha on a lot of different markets. You just have to make sure that the volatility is there so you can actually hit a profit target, but you have to make sure that they also flatten out. One commodity or one product that I would never trade the Piranha on would be the US 100. There's no way. There's no way you can't get away with it because it's just too volatile. It's way too volatile. But something like this right here, WTI crude, we're sort of in the afternoon. We've got about an hour left to trade. We're not expecting a flurry of action until we get towards about that 2:30 p.m. Eastern. You could probably get away with it right now. And they say, Shane, I'm not a futures trader. And I go, I understand, but if you tried to do this on like a U.S. oil with those big spreads, it's going to be really difficult. It's going to be really hard to do. So this trade right here, you can see is setting up beautifully. Right now we've got about 11:30, about 1:30 p.m. Eastern. We definitely have an opportunity potentially to sell the top of the day here. I don't hate this trade at all. If we go up there and check out that price at 63.54, I think it could be a pretty good one. It's just a question of, do we get there and do we sit here all day waiting for it? That's hard to say. It was a lot easier doing the S&P 500 trade, that's for sure. That one came right to us. Great Britain Pound USD, where are we at? Okay, see, we didn't get elected right there. We've got sort of our order up here, still waiting at 134.26. That's going to be problematic. We're going to have to get a rally up there sometime today to get it. But the beauty of this strategy is you can also go right here. You can go buy limit order. Okay, buy limit. Let's go ahead, take this right down here. Well, that's not our buy limit, is it? Something like that. No, that's attached to the first trade. So we'll do that. Go right down here with our buy limit. Lower Bollinger Band. Take profit as what? 5. Stop loss is 10. And you can go ahead and put that buy limit order in the queue as well. So right here, you can really manage your trades ahead of time. You're looking to sell the upper Bollinger Band. You're looking to buy the lower Bollinger Band. Relatively simple. The hardest part of this is you've got to just always be monitoring this and be as exact as you can, because we're only trading for 5 pips and 10 pips. So you can't just buy or sell an area. You've got to be exact with this one. All right, let's go back to our crude oil trade. Are we going to get an opportunity to trade right here? 63.54, is that still the magic number? No, it's not. We want to adjust our entry right up there. Notice how that Bollinger Band moves. 63.55 is our new entry. Then we want to make sure that we go ahead and dial that in and keep this where it needs to be. Okay, 10 to win 5. Right here, you can see that upper Bollinger Band's fluctuating. It's flexing as this thing moves. That's what makes this one a bit of a challenge to trade. You've got to be diligent. You're watching the Bollinger Band move. Shane, why is it moving so much? Because it's only a periodicity of 12. All right? I use 24s, so the bands don't really move. This one is updating every tick, and as the ticks roll in, the Bollinger Band's updated. That means that it's going up a tick, down a tick, up a tick, down a tick. So you got to be very diligent when you're trading the strategy. Very important that, you're probably going to have to be in front of the screen unless you develop an EA that places the trades automatically for you. Okay, right here, looks like we're going to get in. Did we get filled? Okay, right now we're short. We're short from 55. What's the market going to do right here? We're risking $100 to win $50. Going against us 3. We're trading the high of the day right now, so potentially a breakout could happen. I'm not confident that it will, though. The market's relatively slow. We're up about 1.38% on the day. I'm thinking that this could definitely rotate back down and pay us off right around that 50 handle. I would be surprised if it doesn't. I don't know where the participation is going to come from to drive this market higher. I don't see it right now, but 57, 58. You'll notice that our asks, if you're looking at the market depth, our asks are definitely outweighing our bids. The market's still moving up, though. We could be in trouble here. We need this thing to fail right now. This needs to fail, and it needs to come back down. Run it against us. We could be in trouble. We could be in trouble right here. 60, 61. We're about 5 ticks down. Still not a huge move, but we are grinding higher, and it looks to me like we're going to go up, potentially get swept out. All right, the price has come back down towards our break even, so we're still in the trade. We've still got an opportunity here to make a little bit of money, but the price has to rotate back down. Okay, we're at break even. Are we going to have an opportunity to trade 50? We need 63.50. That's sort of the magic number. 63.56. We're right at 55. Interesting type of a dynamic here, guys. Could this be a failed auction right at the high of the day? Did the sellers lose, or are we just going to trend and grind higher from here? It's hard to say, but we've got our trade set up. Remember, every good trade has 3 parts. You've got an entry, a stop loss, and a profit target. We've got all 3 of those things right now. So the question is, which one gets hit? Our profit target or our stop loss? We're risking 100 to get a payoff of 50, and when you're doing that with a negative risk versus reward, you better be right, and you better be right a lot. I think we have a great chance to win this trade. I would be surprised if this thing kicks higher. It looks like it got a little bit tired. It looks like the bidders are sort of losing the fight up there. You'll notice that your depth of market, the bids, you still got significant asks, but they're changing all the time. We're rotating higher and higher. This thing might take a little while to play out. Let's go ahead and watch and see what happens. For right this minute, the worst of it could be over. Sellers were there at 60, but we're still in a very bullish environment here on the day. Very difficult to call this one right now. I think that it rotates down and fills us up. I really do. But we'll have to wait and see. The pressure's definitely on. Let me see. How about good trades? Yeah, I mean, this trade right here is, we got to do something, right? They don't pay us to sit around and wait. If we got a strategy, we got to trade it, and this is our strategy. So you'll also notice one other thing. The Bollinger Band slope. And you're saying, Shane, you should have been short from up there. You can't do it that way. You've got to do it in real time. That means when that Bollinger Band's moving, we nailed it pretty much where it was at the time. If it kicks higher because of this price action, that's not indicative of really where the band was. Right now, 63, 57, 56, we're right at break even. This remains to be seen if we get paid or not. Let's see, Great Britain Pound USD. We'll get back to that in a second. 134.21. We're still just sort of rotating around. Now this one, you definitely got to bring that down, your entry point down there, and be looking for something like that. That would be it. See, I view this as a pretty good sign in this crude oil trade. Upper Bollinger Band is holding its topside resistance, 5 minute, really showing that price action's flattening out. And I mean, you sort of buy the ticket and go for the ride. There's nothing we can do right now. There's no decision to be made. We got our entry. We've got our stop loss. We've got our profit target. The work's done, and that's why a lot of traders really love strategies. They love systems and they love strategies because you don't have to think. There's no thinking involved here. You just put it down and roll with it. Our risk is defined. You're supposed to put 3% of your account balance on that. I don't know if you need to go that high. If you're trading 5 or 6 of these products, you could probably just get away with 1% and take 25 trades a day. I mean, that really is up to you. But this trade's starting to grow on me a little bit. I mean, I could see them sweeping this thing lower down to that 50 handle and getting us filled up. Does it happen right now? Yeah, we'll give it 3 more minutes or so. We'll see. Feels like it wants to break down, though. Feels like sort of a failed auction there up at the top of the market. Really tough buying tops this time of day. I don't know who was buying the top there, but I think they're going to get burned. We just got to see rotation back down to 50. In any case, back to our Great Britain pound trade. We're almost short here. We have an opportunity potentially to get there. You guys see they pay us to wait. They don't pay us to trade. I got way behind on the live chat over here. Let me see. Dragon 131. My best trades are when the spread between the Bollinger Bands is 10 pips or less. Tokyo Open. That's great. Absolutely fantastic. Thanks for contributing. I mean, Dragon's traded this strategy. He knows. My best trades are when the spread between the Bollinger Bands is 10 pips or less. Tokyo Open. That's great. That gives you an absolute rotational market. Now, right now, so if we were on a 10 pips or less, so you're looking at 134.16 or 134.25, so that would qualify. That would be a 9-pip spread. That's an advanced way of looking at the markets. I like it. I mean, your creativity is everything, guys. Let me see. Gordon, good to see you. Gordon just got back from the doctor. I'm confident things went well. Thanks for joining us. We're just doing a little bit of live trading here. This one right here, are we going to get an opportunity potentially to sell it? It looks like we are. Entry points right there at 134.25. We need to move it. Remember, you got to be diligent with this thing. 134, we're right there at 134.258. That's going to go ahead and be our entry point. See how this develops. I think we're going to get it, though. I'd love to see that go short so we could just illustrate how the trade works. And remember, you've got to adjust your profit targets and your stop losses as well. You're going to have to do that on the fly. The drag and drop on TradingView works really well for this, but you also got that drag and drop on MT5. I can run through that real quick and see. All right, we're getting a little bit of action right here in our WTI trade. Still right around even. Looks 63.55. There's just nothing in there. I don't know really what would move the market higher at this point. I'm starting to become more and more confident that we're going to get this price to fall back down and check 50 out, which I love. My biggest question is, are we going to get filled at 50? Are there enough, we're looking to buy 50s. Are there any sellers there? Hard to say. Definite compression, though. You got a doji setting up in the 5. Now we're trading a little bit higher up to 56 or 57, but this is just noise. This is intraday noise at this point. I don't know. I think we got an opportunity there. Am I going to sit here and watch this all day? No, I'm not. I chose crude oil because I was hoping, and I remember hoping's not good. It's for children. But I was sort of thought that we'd get a faster trade execution and maybe get in and out of one. But in any case, this is it, guys. This is sort of buy the ticket, go for the ride. We've got our stop loss down, our profit target. Looks like the crude oil is just in steady rotation. I'm kind of surprised we haven't got filled up just yet on the downside, but it's a heck of a fight going on. Looks like we could break higher, and if we break higher, we should get swept out, and we are going to want to exit that trade at 65. I don't want to be around, because if we do blow higher, you're probably going to 62.75. You don't want that. You don't want to go for that ride. This ride here was a near miss. Almost got filled there, but we may get filled right in here. Tough to say. You want to stay right on that upper Bollinger Band, though. Labor-intensive trading strategy, guys. So if you're fidgety and you love to work the buttons and you love to trade, that's a pretty good one. All right, well, there's not much happening here. I think you guys get the basic idea of the Piranha. I'm going to go ahead and circle back around. We had a request to look a little bit on the yen. So I'm going to go ahead and pull that 920 strategy up that we started off with and see about, I believe it was the daily and the weekly on the Japanese yen, which really is the big mover right now in the Forex market. So we'll get our coded 920 up and see what we've got cooking here. Okay, so there's our yen, still trading about 148.28. Love it. Daily. Yeah, I'm not really seeing a crossover there. Looks to me like you're still long, but definitely a big gap up. Let's go to a weekly. I see what you mean there. I see what you mean on the weekly. You got sort of a weekly buy signal setting up, which could tell us that maybe that rotation, or excuse me, that pullback is sort of over. That's definitely a strong signal. So keep a close eye on tomorrow's weekly close. We could definitely be looking at maybe a weekly buy on this 920. And for right now, in the U.S. dollar, Japanese yen. So definitely want to look at that. 4-hour trade, sort of the one I'm watching, turned into a swing trade. Not too bad, though. We've got the kick that we were looking for. All right, everybody, I'm going to go ahead and sign off. This is like watching paint dry. Remember, good business is boring, though. Good trading is boring. There's really no rush involved. You're just getting in and getting the job done. And you can see our crude oil trade. I'm starting to like it. Market's definitely flat. There's not much participation. Volume has dropped way off. Those all suggest that we're going to get a pullback, and there's nothing there to drive the market higher. We'll wait and see. All right, everybody, that is the Piranha Strategy. If you have any questions at all, be sure to reach out to me over in the How to Trade trading room. You can send me a private message. I will do my best to get back to you in short order. I got a lot of messages the other day, a lot of really great comments from our FOMC Minutes stream. Big time trading day yesterday. A lot of news was made. I'm interested to see exactly what happens with regards to Fed policy. Our expectations have shifted dramatically from last week at this time. We're also going to be back tomorrow. We're going to be back on all platforms tomorrow. This was for Switch Markets folks and the How to Trade community exclusively. So we're going to be tomorrow. It's going to be the Friday strategy session, how to use Bollinger Bands. I'm going to show you how to use Bollinger Bands. That sort of ties in with what we're doing today, but I'm going to show you my tricks and what I like to do with Bollies. We're going to add them to charts. We're also going to do a complete market scan and a market sweep and talk a little bit about how to interpret what's happening in the Bollinger Band. Not necessarily the band itself. We're not going to be John Bollinger, but what we are going to do is look at the bands and see what information they convey from a very, very, very pragmatic standpoint. All right, everybody, that's a wrap. Here's my new pet rock, WTI crude oil. I can't say that I've seen it that quiet in a while. For us to be turning in a 5-minute range, what was a 5-minute range? It was only 6 pips, 4 pips, 6 pips. That's absolutely astounding. That's incredibly tight. All right, everybody. I want to thank you for joining me today. I'm confident everybody's doing well and had a great week. We're going to go ahead and be back tomorrow to close this week up right. We also had a trade idea out earlier today. If you missed it, head on over to the How to Trade trading room. Give me a follow, and you can have those delivered directly to your inbox. All right, everybody, if there's no more questions, I'm going to go ahead and sign off here for a few hours. Have a fantastic trading day. Trade the action well, and we'll talk soon. See you.